Imagine you're planning to build your dream home. You've saved, you've planned, you've imagined every detail. And then you're told the cost just went up by thousands of dollars because of a political fight over lumber. That's exactly the kind of shock many Americans and Canadians are feeling right now. In early 2025, the United States and Canada, two of the closest economic partners in the world, reignited one of their oldest trade battles, the Softwood lumber dispute. This isn't just about wood. It's about jobs, housing prices, national pride, and the future of trade across North America, and it's heating up fast. So today, we're diving deep into why this tariff war started again, who's winning, who's losing, and what it means for you. Whether you're a homeowner, an investor, or just someone who wants to understand where this is headed. Before we dig into the sawdust of this story, if you're finding this breakdown valuable so far, make sure to like and share this video so more people can understand what's going on behind the headlines. This fight didn't start in 2025. In fact, the US and Canada have been arguing over lumber for more than 4 decades. The pattern is almost predictable. Accusations, tariffs, temporary truces, and then it all blows up again. Here's the heart of the dispute. In Canada, most forests are publicly owned, and provincial governments charge companies fees, called stumpage rates, to harvest trees. U.S. lumber producers say these rates are too low and amount to a subsidy, allowing Canadian companies to sell lumber at prices American producers can't match. Canada disagrees, saying its system is fair, transparent, and rooted in different land ownership rules. In their view, this isn't about unfair advantage. It's about the U.S. not liking the competition. The last major peace deal, signed in 2006, expired in 2015. Since then, the two sides have been in a constant state of low-level trade tension. But in February 2025, things got serious. President Trump's administration dropped a bombshell, a 25% tariff on Canadian softwood lumber imports, on top of existing duties averaging about 14.5%. For some shipments, that meant a total tariff close to 40%. And it didn't stop there. The U.S. also hit other Canadian exports, like oil and energy products, with a 10% tariff. Commerce Secretary Howard Lutnick gave an August 1st deadline for a new trade deal, making it clear that Washington wasn't bluffing. The message was unmistakable. The era of half measures and temporary reprieves was over. The impact was immediate, and not just in Canada. Even American timber giants felt the sting. Weyerhaeuser, one of the biggest U.S. timber and forestry companies, saw quarterly profits sliced in half. Earnings dropped from $173 million to just $87 million in a year, even though revenues were slightly higher. Rising costs, weaker demand, and market oversupply all combined with the tariff environment to hit their bottom line hard. The U.S. housing sector also took a hit. Mortgage rates were already squeezing buyers, but now lumber prices spiked too. In May, sales of new single-family homes suffered their sharpest drop in nearly 3 years. Builders postponed projects, uncertain how much their materials would cost next month. Industry projections warned that if the tariffs stayed, they could add $14,000 to the cost of building a typical home by 2027. A nightmare for a country already facing a housing affordability crisis. And it didn't stop with builders. Sawmills cut fewer logs, factories slowed production, and logging crews got less work. Every link in the chain, from forest to framing nail, felt the pinch. Ottawa wasn't about to take this lying down. Canadian Trade Minister Dominic LeBlanc reminded Washington that Canada isn't just a lumber supplier. It's also a financial powerhouse in the U.S. market, with $1 trillion in Canadian investments in American assets, growing by $100 billion a year. That's not a threat to pull the plug, but it's a clear reminder. Canada has leverage. Prime Minister Mark Carney, with his deep background in global finance, refused to be rushed. He made it clear Canada wouldn't sign a bad deal just to meet an American deadline. Behind the scenes, Canada even considered something it has long resisted: export quotas for lumber. If structured carefully, they might offer predictability in exchange for tariff relief. And perhaps most importantly, Canada started to diversify its markets. In a single year, the share of its lumber exports going to the U.S. dropped from 78% to 68%, with more shipments heading to Europe and Asia. That shift wasn't easy. Shipping overseas costs more and customers demand different wood grades. But it showed Canada could adapt fast. Washington didn't just slap tariffs and walk away. The administration also announced a 25% boost in logging on federal lands and encouraged domestic mills to modernize with automation and robotics. Some mills that had closed years ago are now buzzing again. And interestingly, many are owned by Canadian companies. Firms like West Fraser and Canfor have been buying or building sawmills in southern U.S. states to get around tariffs while staying in the American market. It's a strange twist. Tariffs meant to protect U.S. producers are also encouraging Canadian companies to set up shop right inside the U.S. This is where I'd like to hear from you. Do you think tariffs actually protect domestic industries, or do they just change the way companies do business? Drop your thoughts in the comments. Even with new logging permits, U.S. timber supply won't jump overnight. Many national forests are remote, and lawsuits from environmental groups will slow any big expansion. And forestry has a boom-bust cycle. Overcutting to meet short-term demand often leads to shortages and price crashes later. Sustainable harvesting is a tricky balance, especially when climate change and conservation are part of the equation. By mid-2025, the lumber war is at a stalemate. The U.S. is betting that economic pressure will force Canada to compromise. Canada is betting that it can wait out Washington while building stronger ties with other markets. Trade experts say the most realistic solution would be a new softwood lumber agreement with predictable quotas and no tariffs. Others suggest joint investments in forestry technology and sustainable harvesting. But any solution will take political will and trust. This isn't just about two oaks fours. The way this dispute plays out will set a precedent for how the U.S. and Canada handle future economic disagreements. If they can't resolve this fairly, other industries, from agriculture to energy, could see similar conflicts. It's also a reminder of how interconnected our economies are. A policy aimed at protecting one industry can end up hurting others, and the very consumers it was meant to help. Right now, a simple piece of lumber isn't just wood. It's a symbol of policy choices, national pride, and competing visions for the future of North American trade. The real cost isn't just in dollars. It's in strained relationships, delayed housing projects, lost jobs, and missed opportunities. The U.S. might win short-term revenue from tariffs, but in the long run, it risks weakening its position if trusted partners start looking elsewhere. The lesson? Once an ally starts walking away, it's hard to get them back. The 2025 lumber dispute is more than a fight over trade policy. It's a test of resilience and adaptability on both sides of the border. The outcome will shape not only lumber prices, but also the tone of U.S.-Canada relations for years to come. For now, the forests are quiet, the mills are tense, and negotiators are working behind closed doors. The stakes are high, and the next move could decide whether this ends in compromise or in a prolonged economic standoff. If you found this breakdown helpful, don't forget to like, subscribe, and ring the notification bell so you don't miss future updates on global trade stories that affect your wallet. Thanks for watching.